Okay. Hey, everybody. Dan Fitzpatrick here, stockmarketmentor.com. By the way, before I forget, because I just finished the premium strategy session and I was mentioning at the very end something. So I'll mention it to you at the very beginning. A couple weeks from now, not this coming week, but the following week, I'm going to be teaching a webinar, and this is only for members, though that includes trial members. Hint, hint. I'm going to be teaching a webinar on 10 action steps to trading excellence. That's going to be a webinar that I promise you will change people's trading. I designed it that way. It's really cutting edge. Nobody ever teaches things like this except me. And so if you're a member, watch for the emails. You're going to get them. If you're not a member, you don't need to watch for the emails because you're not going to get them. It's only for members. But if you want to be a trial member, you can do that. So you sign up for a trial. It's a 14-day trial. I think it's going to set you back $7 if I'm not mistaken. So, and if that's a problem for you, then this probably isn't your deal. Anyway, so check that out. Watch for it in your email. Meanwhile, Netflix. So I'm Captain Ahab, and this stinking thing is my Moby Dick, because I had put on an iron condor here, way out of the money calls, way out of the money puts, where I'm assuming that the stock's going to stay within this range, right? Okay, well, that didn't happen. Like right away, first day got blown out of the water. So, okay, I'll close that out. The puts expired, worthless. It's all good. But then, okay, so this has gone up enough because it had a bad close relative to the high, so it's probably going to settle down here. Okay, that was a big mistake on my part, true confessions, because I teach this. I teach people that volatility squeezes, once they break out, a breakout from a volatility squeeze typically goes a lot farther and a lot faster than you think it will. It's like this remarkable explosion of pent-up energy. And I've taught that for years, but it's kind of one of these deals where just because you teach it doesn't mean that you always do it right. And this is the case for me. I'm just telling you this so that when you have a bad trade or something, you can hear me say, I feel your pain. It just sucks. And so then the next day, remember, I had taken a short position by short options when the stock was down here. So the next day, like, it gaps up $7 and then continues to trade higher. So it was up $17. So I got whacked on that deal too. And then I didn't do anything. And then today, I'm watching the stock, and then intraday, it turned around, looked like it was turning around. So I initiated another short call position, but here's the deal. I did close it out, and I only took a little loss on this. But here's the moral of that story, and I'm going to leave you with this. I got a lot of stuff to do during the day. I can't just sit here and trade all day. Frankly, it's been shown that the best traders, the most profitable traders, only spend a maximum of 4 hours in the market every day. They don't sit there all day long and bang stocks around. So I try to do that as well. I don't have a 4-hour thing. I'm just telling you, I don't sit here and bang stocks around and always be staring at them on the 1-minute chart. That's a silly thing to do, and it's not something that's going to make you money. But so I went ahead, I initiated a short call position, and it started making money right away. I'm going, okay, well, finally, maybe I'll get some of my money back. But then I did this before I just went away and let the thing on its own. And no, I didn't set a stop. It's hard to set stops on options because the spreads are wider and they tend to oscillate more. And no, it's not like some market maker is gunning for your stops on your 10 call options. It just doesn't happen. Like, nobody cares about us that much. But what I did instead was I placed an alert on the stock. And my sense was, okay, if the stock goes above X, that means I got to be looking at closing this position because I don't expect it to do that. And then I went about my way, and it wasn't but maybe 10 minutes later, I hear ring, which is my software telling me, you got a problem, danger, Will Robinson. And so I went back. Sure enough, the stock was breaking out again, and I closed the position. It was like right here, because I'd expected it to keep going down. And then ultimately, oh, well, it did go down. No, I'm shorting it here. And we're doing good. Yippee, we're down $7. And then the next thing I know, this thing starts breaking out. And I totally had respect for this. Was it here? No, sorry, I'm looking at the wrong day. That was yesterday. It was like here or something like that. It was going down a little bit, and then it came up and I closed it out. And so the point is this, there's 2 points to make. First of all, I put on the position, but at least I had the prudence to say, okay, I'm not going to sit here and watch it all day because I'll do something stupid. And I've already done something stupid a couple times on this stock. So I'm not going to watch it, but I am going to have my trading assistant, which is an alert system. I'm going to have my trading assistant watch it and tell me if something goes wrong. So I got an alert. I went in, I looked at it, I pulled the trigger, and I got out with a loss, a manageable loss because I don't take big ones. And sure enough, and as soon as I did that, I'm going, okay, well, that's definitely the top. When I close out a short position at a loss, that's when the stock turns around and rolls over. Well, that wasn't the case here. The stock kept going, and it ran up another $7 or $8 until it finally pulled back, but not even really to where it was before I'd closed the position. So the moral of the story is this. If you set a stop, you set an alert, and then you get out of the position, you're out of the position. Don't second guess yourself. You made a plan. You stuck with your plan. That's the plan. You execute your plan, and then you don't think twice about it. But what you should do is you should look twice at it afterwards to see if you were right or wrong. And in this case, I feel good about that loss. Because if I'd held the position and it was going against me, again, I'm short call options, which is a really bad place to be when you're naked. It also doesn't look very good. So when you've got a position that's going against you and you say, okay, well, I know it's going to pull back, but it keeps going against you more and more. At some point, you're going to cry uncle. And when you cry uncle, after you should have been out earlier, when you cry uncle, that's the top right there. And so don't put yourself in that position. Have a drop dead price where if the stock hits here, boom, I'm out of there. That's your price. It's not emotional. It's just trading. Because if you don't do that, now you're in the trade. The trade's going against you. You have no frame of reference other than the emotions that you're feeling and the dollars that you're losing. And at that point, your threshold for pain is going to dictate when you get out. And some people, typically the biggest losers, have the highest threshold for pain that you've ever seen. But they always lose because that threshold for pain is finally reached right when the stock has gone to an extreme. So don't do that. Use your trading assistant, set price alerts or just hard stops. But the point is, plan your exit before your entrance. That's the thing. Don't go into a concert venue if you don't know where the exits are. All right. And that is all I have to say about that. I'll see you guys next week.